Hello guys, welcome to the Trading Parrot. In this video we're gonna talk about a bear flag that is currently forming in the price. And as with every single bear flag, the price could potentially move slightly higher to reach the final target for the bear flag. And after that, maybe we're gonna get that C wave. So I wanna talk about how high the price could get before we see that happening and what could be the final target of that C wave. If you want to watch a full in-depth video with my wrap-up, with my catch-up, with everything that happened while I was literally scratching my balls during holidays, you can watch TTP Returns, the complete Bitcoin catch-up analysis. That is a 51-minute in-depth where I cover everything, general markets, what's going on with the altcoins, Bitcoin dominance, Ethereum dominance, and all of that. I leave you with that video. It's 51 minutes. Make sure that you check the timestamps to see what was covered yesterday. This, hopefully, crossing fingers, is gonna be a shorter one, just focusing on that setup and focusing on looking at the order flow, order book, and all of that to see if it makes sense, everything that we're gonna talk about. Guys, if you like this type of content, make sure that you subscribe to the channel, hit the notification bell to get notified every time I put out one of these videos. And yesterday we got over 500 likes, so can we get today something similar or even better? Can we get to 1,000 likes today? Why not? Up to 30,000 in trading bonuses you can get if you open an account on 2bit. This exchange that was created by the same owners of Bybit gives you the same feeling as Bybit, which is really great. Just by registering, you get $50 for free, even before depositing, which you can already use to trade. Now, if you start depositing, you can get those bonuses. The more you deposit, the more you trade, the more bonuses. 2 minutes to register, non-KYC required, all levels of leverage that you might ever need. Really great exchange. Market shift is CryptoQuant saying, from well-driven to retail-led Bitcoin futures. So now we need to look at every single move in futures, every single wave up and down as driven by retail. And retail tends to do things not really perfect. They tend to panic, they tend to FOMO and all of that. And once the whales come back, they hit the table strong and all retail tends to be wrong. So I'm gonna look at the price with that magnifier glass. Bitcoin futures market is cooling with reduced whale activity and stronger retail influence, reinforcing bearish sentiment. Unless whales demand returns, the price is likely to remain range bound or face downside pressure. We also can see Martin again today, short-term holder realized price bull market signal. You can see the previous time that the price was below this indicator. Easy to see because it's always in red whenever we are below it. In a bull market that looks perfect, like a buying signal, we just kiss it a couple of days ago and now we are slightly above it. In this context of looking for a bear flag, the bear flag is this move up in here after this full wave down and touching that green line. What I'm expecting to see, and I'm happy to be wrong, because the way I'm gonna trade this is in a way that even if I'm wrong, I still make profits. And you should be thinking in the same way. So if we are right, the bear flag is gonna go slightly higher and then it's gonna correct. So we can trade that by looking for a short by the end of the bear flag and then take the C wave down with a target of 1 Fibonacci extension or 1.6. We'll look into that later. In that case, if we are right, we're going to produce some sort of red as we saw in here before we start climbing back up. I'm also using the fact that we are in September and maybe we're going to get a little bit more red within the month before we enter into the seasonality of October, November that should be, in theory, in the green. If you wonder how on earth are you going to survive if you are wrong, well, the size of the position, either putting stop loss or averaging down if we are wrong. Well, in this case, it's a short, so averaging up and looking for an additional entry if we get to a new higher high. In this tweet, Axel is showing us how different are the different cycles in terms of valuation of Bitcoin. It also shows that we are still far from the areas of final top, at least from the point of view of valuation. Of course, there are many different models saying otherwise, but in this case, we can see that 2017, it was pretty impressive all the way up with extreme valuations. In 2021, we have the wave into 48K with extreme valuation, but never again. Then immediately after, we started seeing the topping signals, but actually the final top was at 69, the top of that cycle that happened as part of a dead cat bounce with a higher high. Yes. This cycle, the only time that we've been in the extreme valuation was at around 73.5. At that time, I still have a post on Twitter where I sold all my Bitcoin, not because of this indicator, but because of a long list of 100 things, not 100, I'm lying, less than that, but tens of different indicators that were telling me that that was the right time to sell it all. I ended up rebuying between 53 and 49, which I ended up riding again up as a decent trader would. Now that we are at these levels, I'm a lot more cautious on the buying side, and I'm getting a little bit more cocky with my shorts. And yesterday, as my comeback gift, I got news that one of the largest attacks in crypto history stole less than 50. Hackers broke into the Node Package Manager. If you are a developer, you should be familiar with this. If not, it doesn't matter. It just means a lot of waka waka to say that software that is meant to be used by developers that upgrade and keep up-to-date packages to develop things, like with pieces of Legos. These pieces of Legos got some sort of viral infection that was propagating by these packages into the software everywhere, and particularly the one that affects decentralized applications was infected with that, swapping the destination address where you are sending your funds and swapping the address with the attacker. Therefore, you think you're sending money to your grandma and you're actually sending it to the scammer. All of this happens under the hood. So the recommendation from this news is to be careful when using any of these wallets that are on top of the browser, because they rely on JavaScript, therefore they rely on this sort of packages, and no one knows, no one has confirmed if they're all clean. So if you happen to need to move $1 billion in USDT by tomorrow using one of those, I wouldn't do so. What's the most important things that we need to look into Bitcoin today? We have first, Strategy, MicroStrategy buys almost 2,000 Bitcoin. That's 217 million. This happens on the 8th. Yeah, that's yesterday. Direct spot demand from a major corporate treasury. Net new buy pressure and confidence signal during consolidation. We have a 7 out of 10 bullish as well. This is US spot Bitcoin ETFs post 364 net inflows. And yes, finally, we're seeing a little bit of green after 2 days in the red. Interesting that if you add up 200 plus 106, it gives you roughly 360, 370. Basically, is flat between the 3 past days. Alvest Capital plans to raise 210 million for a BTC treasury. Another list company preparing to accumulate BTC broadens corporate treasury adoption and adds incremental spot demand. So let's go back into this setup. And number one thing that we need to consider at the moment, apart from the seasonality and the fact that this has been a long wave down up until there, and we are in the middle of something that looks pretty much like a bear flag already. So this has my permission now to start doing this, or maybe fill the gap and come back down. Now, if we are wrong, we are gonna need the price really to put a new all-time high and to close all the fair value gaps that we have to the top, okay? We already took all the small fair value gaps in here, and there is a heavy one. Why is it heavy? Because it's an overlap of a fair value gap daily and for hourly. That's why it looks lighter than the rest. That doesn't mean that this is all we have to take. We could take a little bit more and be wrong. But let's say now we start taking this at 114.700 and then we go for lower levels in here. Not saying that just because there are fair value gaps in here, but because there is a ton of liquidity below this double bottom. That is where the risk of people is currently placed at 107 and followed by 95. This is 107, but it doesn't stop up until 103.3. So watch out with an overextended move in here in terms of the liquidity. It doesn't have to just stop there. It could and maybe do a slightly lower low. But if this is really gonna behave like an ABC wave, I will expect this to at least get into 102 and to 100. Now, if we get really lucky with the short, we could go for 95 as a target in terms of liquidity. But liquidity pools are not everything. So let's park this for a moment. This is just one perspective, and let's also look at this from the point of view of trading different. That brings a different algorithm to calculate with an heuristic where is located the pools, because no one really knows where they are or how big they are. This is just speculative based on software, not on data. And at the moment we are approaching the liquidity in here. That is where we have a decent amount. In the 3 month on CoinGlass is not visible, so we need to drop it to 1 month. Maybe we're gonna see it there. And yeah, that is the same. That could span up until 120 easily and still be in the context of a bear flag. Now, the perfect situation will be to fill the gap and just start playing out immediately. Perfect in terms of, well, we clear out that stupid CME gap and then we have even more permission from market maker to go even lower because we are not leaving behind at that point any CME gap bullish. We already took it. That's what I mean. And if you missed yesterday the Bitcoin status, here it is. I'm not gonna go through it again, otherwise the video is gonna be 1 hour. The link to this particular slide is shared with my Patreon community, so you can always see it as I'm taking notes. Sometimes during the day it's gonna be changing. It uses Google Docs. Yes, and on the 4 hour, this is in the context of a breakout that is still struggling to put the new all-time high. New higher high. I think I left part of my brain in one of those barbecues in South America after doing things that I cannot say really in YouTube. But I promise you that it was a lot of fun. Now, this pattern in here is starting to look a little bit bullish. If you are not so judgmental with the fact that this is not a perfect inverse head and shoulders or double bottom information, that's what it looks like. It's got some sort of neck in here and it's starting to pinch there to escape with another wave up. So we could see that. It's increasing the probabilities. It's not a call. It's not future reading. I don't have, I promise you, any crystal ball in here. At least it's not crystal and it's not just one, but it's there and it doesn't really forecast the future. This formation here on the daily is also a little bit bullish in my opinion. It also looks like an inverse head and shoulders in this area with a neck at around 113, and it could pinch easily around the 116, 117, because at that point we have this resistance on the RSI. Now, if we are wrong and we break this resistance, we can go all the way into the top of the range. And that with the short at the moment, top of the range is 149.7. So watch out with that short, your risk management and your plans on how to average up in case you need it. Don't rush to average up. If you enter, let's say at 117, I wouldn't average up at 120. I will have to wait a bit longer, 130 or something, to survive any sort of crazy move up in October or November. Notice that on the daily we have a confirmed MACD as well from the area of support that happened a couple of days ago. Now, if this holds there, the 61, we could have another move down after, and that could be within the C wave that we are talking about that could potentially happen. On CPR, we are facing the first pivot, which is at 113. The third one is at 116. So we want ideally that one to hold the price without going into 120 to still call this thing a bear flag, right? We can have a bear flag like this. Indeed, we can get with a bear flag up until there. The point is, if we get there, we still are not taking the previous high. Therefore, this can still from here play out in this manner, and then you look at the price action in the future and you say, yeah, that was a bear flag. It was a little bit going too far high, and now we need to look into the order flow to see whether entering from 116 or entering from 114 or from 120 is the best idea. Many people will wait until 120 and find that it started from 116, so it's a matter of, well, where do you want to dip your toes into the position? At the cost, the trade-off of being left behind, or entering too early and then sleeping, hugging your pillow during the night. Important context that we are at the moment bouncing from the bull market support band, and that pleases a lot of bullish people, with a stochastic RSI on the weekly potentially confirming next week a bullish cross, but the MACD has confirmed at the same time a bear cross. So we have these forces on the weekly happening at the moment, which we need to really get used to. Price action is very rarely gonna give you all the signals pointing in the same direction at the same time, otherwise everybody will be rich. And leverage squeeze has been very loud this morning, pointing at these signals in here, signaling that there is too many longs at the moment, just like there were here and in this area in here. At some point, the signals are going to be wrong. These white ones are low quality anyways. We don't have any yellow yet like we had in these areas there. Yesterday, we were at 44 on the Fear and Greed Index. Now we are at 48 thanks to the moves up on the price. We are approaching this immediate liquidity at 114. That could be your ticket to enter into the bear flag, which could end up being a little bit too early. There is all this liquidity to still consume if market maker wants to go up until 120 and still stay within a bear flag that is allowed. If we go beyond 120, we are too close to put a new all-time high. We are too close to take liquidity that is above this and then enter price exploration into October. At that point, we might be fully wrong. You can see in the last 30 days that we are immediately facing some decent liquidity form during 30 days. Of course, there is liquidity older than that, but that doesn't appear in this particular chart. So you can see that this could be the incentive to just take 114. So we got option 1, or the 116 by closing the CME gap, or the 120 to take all the liquidity longer than just 1 month and close it up until there. So let's look at the order book and let's see where are the big orders placed at the moment. Many of them are there just to spoof, similar to the ones yesterday at 112 and 13 that they just rug pulled them. It looked like they wanted to short there, but they removed the liquidity right before the impact. And you can see that they move it from 112.9 and now it's placed at 113.97 and it's 41 million. Then we got liquidity of 36 million at 120, and the largest is at 125 with 53.8. And purple whales are starting to move. You can see them if you go into the weekly on material indicators fire charts. Remember that all of these charts, the ones that are not mine, you can get discounts in the description. In the weekly, you can see that the purples are starting to take the lead together with the brown ones. The rest of the cohorts are pointing down, and purples tend to lead the direction, but also they rug pull very quickly. So as soon as they see these other ones getting excited with taking along, they rug pull, and that's your bear flag if it happens. Of course, I'm not claiming I know it will happen. Otherwise, I will have already purchased the whole beach of Reñaca in Santiago just for me. So far, I live a pretty respectful and enjoyable life, but I don't have enough from my trading to buy a full city. And if I can do that, you will probably hear about it. So here I have all the liquidity separated on the left-hand side by liquidity from futures. That's why you can also see open interest. And on this panel here in the middle, you can see everything that's going on aggregated on all exchanges specifically for spot. That's why you only see CBD and order depth. And you can see that there is a discrepancy here, a deviation if you want. On futures, there is activity to hold the price, but it's declining. And spot, as we go higher, is also declining, so they are not much interested. The CBD shows that there are more aggressive sellers on spot, whereas on futures, they're increasing, so they're aggressive buyers that are buying with market orders. So they're getting excited with this move up, and as I started the video, there is more retail, so they are buying into this bear flag, getting excited. So we need to be very careful with this 114 liquidity there that could stop the price and start our bear flag, or maybe the 116, or maybe this large chunk at 118. Remember, these chunks are all day moving, so you're probably going to need a software like this if you want to see if things are changing by the minute. On spot, there are just two large orders, one at 105 and one at 120 that wants to keep the price there. In between, if my eyes are still working, I will say that there is a little bit more on the selling side. So let's go into high block capital and let's focus on this particular chart on the right hand side and this one on the bottom that I used to see the distribution of the ask versus bid liquidity. Very important if we want to take a trade to see if there's a lot of orders defending the price to not go lower or defending it to not go higher. In this case, the light area that we had in here to defend the support is kind of diminishing. You see it less light at the moment, but not that little that it looks like there is an ongoing rug pull already happening. We got percentiles of 71, 82, 65, and 75. Still a little bit high in my opinion. They're still pushing the price higher with orders right underneath versus a defense immediately above the price. Remember, these deviations are 1, 2, 5, and 10% away from the price. In here, we got loads more to see, and I still see the defense coming in. Up until 7 of September, there was almost nothing holding the price between 10 and 20%, and now even that deviation away from the price is now defending the price to go slightly higher. So we might see that bear flag still push a bit more. Let's see what happens against this 114. That is definitely a resistance. If it breaks, well, we get the 116, we close the CME gap, and we start looking for a short. If you are a degen, you can enter at 114 at the cost of hugging your pillow tonight and sweating a little bit cold. After all, there's tons of fair value gaps to the upside, attracting the price to extend that bear flag. Remember, if we get already to 123, well, option 1, we get a triple top. Option 3, we enter price exploration. And let's do a projection. Let's say this is not a bear flag. Let's say this goes straight away into October with bullishness and it doesn't allow September really to correct anything. Well, with this projection, with this slope, you can see that we are now 1/3 of September, here we are 2/3, and here we are already in October. So with this slope, if it holds and it acts in the same way we came down and we do a V recovery, we are then by 1st of October at the top. So watch out with your risk. And yesterday, general markets didn't close bad at all. There's kind of a mixture in here. Tesla to the downside, Apple to the downside, but the rest of tech is okay. Yes, utilities, consumer, durables, energy, there's a little bit of red, particularly in utilities. DXY continues to roll over in here and remain within the falling wedge. RSI says we should continue at some point in here to the upside. Gold is right underneath the all-time high, meaning that people are holding on to their safe haven. VIX just going sideways since yesterday. Nasdaq closing right underneath all-time high. Pre-market is pretty much the same. On the S&P, maybe 1 point or less up pre-market on the S&P, indicating that it could be a positive day, and therefore we might see those bulls defend a little bit more aggressively against that 114. So watch out with being a degen short at this point. If the S&P pushes higher and the market decides to follow up with what the Nasdaq has already done, this bear flag could span a little bit higher. I am not in a position yet. I'm observing the situation and I am making you aware of what my thoughts are. I'm not telling you I enter a short or I'm entering at this precise price and I'm gonna just close my eyes and ignore everything, because that's not the way I trade. If I enter the trade, if I put a limit order in a very timely way, I will let you know via my Patreon community with an article that's gonna go straight to your email. But if I don't do anything, you're not gonna get anything either way. Typically, right after I send that, a few hours after, I put it somewhere on Twitter, and then in the next video, sometimes the day after, I mention that I enter a position, so you still learn about it. Altcoin seems to be today pretty much in the green, so I'm definitely gonna make a altcoin video later today. Maybe I'm gonna do Solana and Ethereum just to start with the right foot, the largest ones. And maybe tomorrow I do XRP and ADA. I'm trying to do the large caps. And on Thursdays, for my elite members, we can do the private TA 1 hour session where you get to vote for which altcoins you want me to do. And we do that in a live stream privately. And on Friday, that live stream goes live or public as a recorded video, so you can still watch it. If you want to know how those sessions are, you can find them. They're called Elite TA. They are all over there if you scroll back down, or you can also find some examples as well in the live section in here, so you can see how those elite sessions are. Thanks so much for watching this video. Remember to hit the like, to write down a comment down below. That really helps the channel. And I let you go so I can record those altcoin videos now. Bye bye.